Hi guys, Brown Asset Management here, and today I'm looking at eBay Inc., ticker symbol eBay, and look at these analyst ratings right off the bat. Analysts have eBay at an average target price of $70 a share by the end of the year, which is a 20% upside, but on the high side they have it at 84, which is 44%. That's huge. Looking at tip ranks, similar story again, average target price $70.59 and a 21% upside with the high on 84. So eBay is currently at $58 a share, so analysts think this has room to grow. I agree with them. Let's have a look at my 7 steps and discounted free cash flow analysis with the Warren Buffett Graham intrinsic value, and let's get looking at eBay right now. So if we just want to look at eBay's share price over the last 5 years, we can look here and see that at the pandemic it got to around $27 a share and then has then blown past all expectations, hitting an all-time high at $64 a share, but has now dropped a bit slightly and is now at $58 a share. So at this point eBay was criminally undervalued, and even now eBay is still undervalued. eBay has a market cap of 39.2 billion, and let's head on to my 7 steps. First is PE ratio less than the market. And eBay has a PE ratio of 16, so that's one of the lowest price to earnings I'll see, especially in the tech center, so that's a pass. Now PE ratio versus the sector is 40.5, eBay again 16.1, so that is a pass again, 2 passes off the bat. Now we want to see is revenue increasing, and the revenue has gone from 9.3 billion to 10.3 billion, so that's a check there, revenue's increased. Now on the next step is profit increasing, and the profit has actually gone from 7.3 billion to 2.54 billion, so that is a fail. But this profit number, it does seem different to the previous 5 years. It does look like a bit of an outlier, so I would want to investigate that more. But off the quick check, it is a fail. Just want to say thank you all guys for watching. Please leave a like if you're enjoying the video, give a comment on your thoughts on eBay right now, and consider subscribing if you want more stock analysis videos. But now let's head on to the next step, of the shares decreasing, and the shares have gone from over 1 billion to just under 700 million, so that's good. eBay is buying back the shares and giving the shareholders more value. Now on the next step, are the current assets greater than the current liabilities? And the answer is yes. They have 7.2 billion in current assets, whereas 4 billion in current liabilities, so that's a check again. Now on to the final step is the free cash flow increasing, and to get the free cash flow we take capital expenditures from the cash from operating activities, and unfortunately eBay has not increased. It's gone from 2.2 billion to 1.9 billion, so that is a fail. You can see these numbers have been slightly increasing and then decreasing, fluctuating around the 2 billion mark, but this is a pandemic year, so I'm quite bullish on the future free cash flow of eBay. I'm going to look at the average of the free cash flows, which gives me 2.2 billion, and that gives a free cash flow yield of 4.91% and an average free cash flow ratio of just over 20, so they're actually pretty good numbers. This is the average free cash flow divided by the enterprise value, which is around 45 billion, so these are very good numbers. eBay does pay a dividend. It's an annual dividend of 72 cents a share with a dividend yield of 1.23%. eBay is paying out their dividend actually in 2 days, so if you've already got an eBay share, congratulations on that. Good. Hopefully you'll be reinvesting that dividend. The payout ratio is pretty safe. You can see it's 30% of the trailing 12 months earnings and 20% of the free cash flow, so that's fine. And eBay has just started to increase their dividend growth, so that is good. So just to recap on the 7 steps, PE ratio less than the market was a pass, 16 to 21. PE ratio less than the sector was a pass again, 16 to 40. Revenue had increased from 9.3 billion to 10.3 billion. Profit unfortunately decreased from 7.3 billion to 2.5 billion, but the 7.3 million was a bit of an outlier. Shares outstanding have decreased from 1.1 billion to 700 million. And the current assets are greater than the current liabilities with 7.2 billion to 4 billion. And finally, free cash flow did not increase with 2.2 billion to just under 2 billion. So that is 5 passes and 2 fails for eBay. As I said before, analysts are quite bullish on eBay with average target prices of anywhere between $70 and $84. Simply Wall Street also agrees with an $84 estimate. And if I go over to my valuations, I've calculated the future free cash flows and applied my discount factors, and that gives me a calculated stock price of $69 a share, which means it's a 20% discount. And if I'm looking over at the Buffett Graham intrinsic value, they have a much more bullish estimate as well. Actually has it at a fair price of $146 a share, and a Graham price, which is a reserved price to buy at $109 a share. Now the reason for this is the growth rate of eBay is expected to be 12% in the next 12 months at least, and the earnings per share is very high as well. So these numbers are very bullish, and that's why I agree with the analyst, and it looks like eBay is a great buy. It's been criminally undervalued over the last few years. At the bottom of the pandemic, you could get it at $26 a share. It's now at 56, and I think there's plenty more room for growth. I wish I analyzed eBay earlier, because I have been a fan of eBay for a few years, but just really didn't give it the time, and that is foolish. This company has a great PE ratio, great free cash flow to market cap and enterprise value ratios, so eBay is looking like a buy to me. Now I'm going to look at some technical analysis of eBay. I have a 200-day in grey and a 50-day in blue, so this is over the last year. There would have been a lot of bullish signals in April as the price crossed these two values here, so that would have been a buy signal. You would have bought it there and rid the wave the entire way, or at least until it was $55 a share. Golden cross here once again, so a lot of good signals here. Price has occasionally broke below these, but it has acted as some resistance. When it has hit this, it's consistently come back through. So the question is, how's it going to do it again? And it looks like it is. It looks like eBay is about to burst back through again. These lines are diverging, so in closing, very bullish signals from the technicals. Does look like a buy off the technicals. Right guys, I want to thank you all for watching. Please give it a like if you enjoyed the video. Give a comment on your thoughts on eBay and what stock you want me to look at next. I heard a lot of people asking for Amazon, so I may have a look at them. And please consider subscribing if you enjoy investing and stock analysis videos, and I'll catch you guys next time.